All right. Welcome back. I'm glad you made it back. Well, unless you're here for the first time, in that case, welcome. We're gonna have a good time today, I think, because I got the volume profile fixed, and if you guys are interested in volume profile, then I'll show you what I think is worthwhile about it. And we'll start out with a blank, not a blank, but just a 5 minute price chart, and we'll start adding on the various pieces necessary to take a look at things and hopefully come up with some ideas about making some money. So let's go up to the studies, and first thing we're going to put on is the auto channel. So you want to see the trend. And interestingly enough, the auto channel is focused on the front end, which is what we want anyway. The rest is history. Not that it can't factor in, but at the same time, we really want to be on the front end of the chart anyway. We have no idea what's happening on the right hand of the chart, outside where price is just popping up now. But hopefully we can start figuring things out in terms of where's a good place to get in and a good place to get out. That's pretty much what you want to do. So let's go back up, add in the elusive volume profile. All right. So all of a sudden there's a lot of color on the chart here. We've got the blue, which is the actual volume itself. We've got the gold or yellow line on the top side of the volume profile, which is the high value node. Then we got the point of control. The green line here is the actual point of control for this period of time. And what the point of control is the most volume for the whole period of the most volume, most activity. So, and then we got the low value area, and between the low value area and the high value area is basically the value area, which makes sense. That's where most of the action is happening. We got a fair amount of volume up at the top here, which is interesting. There's a lot of trading going on. And then plunge. And usually you have a low volume node around here, and that's where price will plunge, because it's just like a vacuum. There's not enough volume to support, and it comes down to support on a high volume node. Even though this is lower than the point of control, it's roughly equivalent to the activity over here, and it acts kind of like a brake. Comes down, kind of finds some support, chops around, and then it ends up falling lower. And you have another low volume node here that's kind of the same thing. It just doesn't find support or breaks support to the downside, and boom, down it goes further until it hits the point of control and chops around the point of control, because that's where the most activity is happening. And then what happens? Kind of loses, the volume drops off. You see it sharply drop off here to another low volume node, and what does price do? Price falls until it closes for that day. So let's see what else we got. I'm just going to put a chart together. We can take a look at anything. So far we've got the volume profile, we have the auto channels. Maybe we'll throw in an EMA. My favorite, 233, not the 200. Everybody's like, the 200, the 200. 200 is not a fib number. 233 is, and it works out pretty well. So what do we got? Well, basically the 233 is showing you can just stay short or stay out of things the whole way down here. There's no reason to get involved unless you're into shorting, which is a good thing to be when you have, a couple days going by and there's no long activity. Then it's really recommending, obviously. So you come down here, and then all of a sudden the 233 turns green and starts heading up. So we got a sharp drop, and we got a lot of work ahead of us working our way out of the hole. But it's chugging away, chugging away. Just got to hang in there, be patient. All right, so we got the 233 up. And that's an exponential moving average, just in case you were wondering. Now the last thing we have, and I'm actually going to take the 233 out temporarily, just so we get more focus going on what's going on. And we've got the adaptive trend flow. Apply that. Okay. And that's looking real tight. That may not work at this juncture. In fact, I'm going to take it off, because it just ends up muddying. Even though colors the candles a little bit, it ends up muddying the overall chart in terms of what I want to see, which is just pure price. So I'm going to back that out. Apply. And go back to pure price. Even though it's not, the candles aren't colored, in terms of trend. That's what you try and do, is color them trend-wise, so you have an easier time of telling when to stay in and when to stay out. But we'll just go with the volume profile and the auto channel, and I think it's looking pretty good. So the next step possibly is to throw a little technical analysis into the equation. The volume profile is more along the lines of order flow, and we just want straight technical analysis. So we can take either the anchored momentum, which I'll throw up now. I don't want to throw up. Then I'll put up on the chart now. And once again, because of the amount of candles that are on here, and I'm trying to almost draw price like a line instead of individual candles, the corresponding indicator is not really giving us much in the way of signals. So what we do is we zoom in a little bit just to kind of take a look at what the anchor momentum can do for us. And zooming in, you got a whole different deal going on here. And what is it showing? Well, you take a look at Lazy Bear is the one who came up with anchor momentum. I think he did a great job, because I think it's a great indicator. I really like it. I like the fact that it'll show you divergence. I like the fact that it gives you pretty simple signals for when you want to get in and when you want to get out. And on a 5-minute chart, you're going to be doing a lot of that probably, unless you really get patient and you hold on for a while. But if that's the case, you can see your profit quickly erode if things don't necessarily go in your direction. So anyway, so we got a bottom here. Not a bottom. We have a low here. This is a higher low. This is a lower low. This is a higher low. So we'll just start here at this low. Then we come down, and the red line is down significantly, which price fell pretty significantly down to this point, so that would make sense. Whereas the green line, which is a slow line, I call this the fast line or the red line. This is a slow line or the green line. We could go into the code and figure out exactly what they are. They're probably like moving averages or something. But anyway, when the red line crosses over to the upside on the green line, that's your chance to, this is the first higher low, basically, that's being noted on the chart, and that's the crossover point here. That's where you can get in and take off. I mean, that worked out well. Not that we know when we're on this candle what's going to transpire here, because that's the future. And as far as I know, none of us are fortune tellers. But anyway, this indicator helps because why? Because it continues to go up, crosses the zero line, which is another boost, getting up over the zero line. And then this flow line does the same, crosses over the zero line, and it's another boost. And then the separation of the two, moving up with the histogram, bright green, indicating that they're moving up in a good fashion to the upside. And sure enough, what do you got? You got all green going on here. And you come up to some chop at the top. And what happens? The red line falls below the green line. And that's pretty much where things end in terms of that first burst to the upside. And because this is what I call too much too fast, I mean, it's great if you're in on it. You just watch the money just rack up, you know? But it's too much too fast in terms of structure. It's not building enough structure to really carry on forward. But what happens anyway, it comes to a temporary top or a swing high, sells off a little bit, and then it gets another push, and then it comes down. So the push is usually divergent, the extra push. Like this is the legitimate run, and then this is not illegitimate, but it's just a push further higher. So you got a high here, you got a higher high here, and then we come down to the indicator, and the red line crossed the green line to the downside. That's the first knock. Then the red line doesn't get back over the green line, and both are basically working their way down. And meanwhile, the chart is going up. And at the chart, but price is going up. So you know you're going to get a move to the downside. You don't know how much necessarily, but that's what the indicator helps with, is to know what's going on. And what we got here is divergence. This is higher, this is lower, this is higher, or this is lower, I should say, compared to this is higher. So which would that be? That would be regular bullish, no, bearish divergence. Regular bearish divergence. And lazy bears, anchor momentum helps you out with that. So what does price do? Price works its way back down to a higher low. So we got the low here, and not the low, but you know what I mean, a swing low. And we got another swing low, but it's higher than the previous. So that bodes well for another move up. And sure enough, we come down to the indicator, and you got this kind of chop going on right here as it's basing. And what does it do? It comes down hard. It does like a round down, I call it. It rounds down to a higher low again, and then off it goes. And if we come down, we take the low here, bring it down, we just wait for the crossover of the red line. We're not going to get in here because we don't know how far down this is going to go. But when the red line crosses over the green line to the upside, that's the start of another uptrend. And then once again, the red line stays over the green line. They both cross the zero line, and they work their way up to a top, which is exactly what it did. And it's not a top, it's a swing high. And then what happens? The red line cracks, gets back underneath the green line, and then you get a little, I mean really consolidation. It's not a sell-off, that's for sure. And what is it consolidating to? Another higher low, and off you go. So it's a series of higher lows, lower highs, divergence, and I'm not thinking of one. I gotta remember. Confluence, which we're not seeing confluence here, but we see confluence along the way. So let's move on. So you got a sharp rise here, and the indicator indicates that basically, yeah, it's a hell of a run. But I think it's too much too soon again. Not as much as over here, but it lacks structure. It's just, huge pushes price-wise upwards. But it is indicating strength, because why? Because you didn't get a substantial sell-off to the downside. You got more of a consolidation to a lower or a higher low, and then off you go again. And then you got more consolidation, and then it pushed to a lower high. And interestingly enough, about a lower high, that's when it can come down hard to the downside, which it's not tremendously, I mean, it's not like over here. That came down more significantly. But once again, we can look at the histogram will tell us divergence too. So we got a point here, which is basically high. Then we have a lower high over here, and we're up higher over here. So we go from high to higher, and then we go from high to lower. So we get another bearish divergence. That's when it starts working its way down again. So once again, the anchored momentum does a good job of working with your chart in terms of showing, various opportunities, whether they be divergence, lower highs, higher lows, that kind of situation. So you might want to work it. But like I said before, I could get into the nitty gritty on a 5 minute here, okay, and start trading, or I can move myself. Let's see if it's going to give me a chance to do it. There we go. I could zoom out and look at price as a line as it revolves around the order flow or the volume profile and how it's interacting. And when we get a severe drop like this, maybe I'll zoom in and see what's going on. Like this is too much too soon in terms of a drop, but it continued to drop anyway. So maybe this wasn't too much too soon. Maybe it was just a breakdown. I mean, price came down here right around this high value area, came down again and retested, and then it really broke. And if I remember back, it was inflation. It was inflation news that drove that break to the downside. I mean, the report was, well, I won't even get into it. It doesn't matter. What does matter is news affects the movement of futures, stocks, everything. So you got to be up on the news. And there's a site called Trading Economics, and I think I put a post up about it. It's a great site for just pure market-related information, just basically economic information. And you can get it for any country. I focus on the United States because we're in the United States market, but you can get it for any country around the world. I mean, it's really a comprehensive site. What's the URL? I can't think off the top of my head. But anyway, we'll move on. Getting back to volume profile, I basically told you about the the volume profile for the day in terms of the low value area, the point of control, and the high value area, and the value area being between the low and the high. But there's another facet to it, and basically this is what Snoopy Doopy and Claude helped out with. I had this idea that you should project out, because this sphere of influence, or not sphere of influence, but say this high value area as a support, which it showed here, should be support and extending out until it's broken to the upside, and then it becomes the other way around. I'm sorry. It should be resistance, but if it gets broken to the upside, it becomes support. So let's see if there's an instance that I can come across. Well, here's a perfect example where we have the point of control here. It extends out for the next period, and what did price do? Came up and hit that resistance and couldn't really break through and had to back off. So that's an instance where the point of control, which is this magenta line, the low value area is more like a plum. It's like a darker line, darker magenta. And then the high value area up here, extending off of the previous high value area, is it's the darker magenta color too. What was I going to say? There's one more facet to all of this order flow stuff, or this volume profile stuff. It's all support and resistance pretty much, but the one more thing is you have a point of control that extends out into the next period as just an extension of the point of control. Then you have a dotted white line here, and that's called the naked virgin point of control. These great names they come up with, I think. Naked virgin point of control. And why is it a naked virgin point of control? Because price doesn't touch it until somewhere further on down the road here, where hopefully it comes back up and it touches it, and then all this becomes is a support and resistance. But for now, there's one here and there's one here, and price is nowhere near it. So that generally says that price is going to be staying down for a while until it finally does come up and touch the naked virgin point of control, and then all of a sudden that's not an issue anymore. So these become targets, and this thing working its way up now with the channel indicating that it's working its way up should be working its way up towards the first naked virgin point of control and then the next naked virgin point of control. So that's that. There's probably more. I could probably dig up more information, to provide you in terms of if you felt like reading up on it, you're interested in it more. But that's how I'm basically following along with it. And let us see if there's anything else to add. I think we're going to keep the charts really simple and basically just stick with the volume profile, the auto channels, and the anchor momentum. And then every once in a while I'll turn on just to check the 233 EMA just to see what's going on with that. Now there's one more tool, and it's kind of tough. It does a great job when it's working. It does a great job. But if the situation isn't set up totally for it, it tends to not work so well. And it's basically revolving around the VIX, except it's an inverted VIX. And A. Jordan 930 came up with it. I just jumped on it because I thought it was a great tool. And it complements the anchor momentum nicely. The two work nicely together. So if I just put it up there, we'll see what happens in terms of display of the indicator. It's taking its time. There it goes. Okay. For some reason, there's breaks in here. And I think the reason for the breaks is because the VIX itself, which is the fear index, is basically option contracts on the SPX, which is the S&P 500. It's a gauge. It's a gauge of fear and confidence. And basically the VIX is low when everybody's feeling good and basically bullish or basically just euphoric or whatever. And on the opposite side, it spikes up when all of a sudden everybody's afraid for some reason and prices are crashing down. So we got these lulls in between. Like this ends at like 4 o'clock, which is market hours. Now it starts at like 3:30 for some reason. I don't know why it starts so early. Could be the European session for some reason, because that's right around the time of the European session, I think. I do know it stops at 4. So what do we do? I'm gonna go up here and I'm just gonna look. If you take extended hours off, how it might or might not change things. Yeah, it's a little bit better because it doesn't have so much, you know, time in between when it stops and it starts. And it looks like the gold or yellow line is the inverted VIX. Then the light blue or the cyan line is a moving average of the inverted VIX. And then the red dashed line and the green dashed line is a Bollinger Band for volatility. So it's really got some great elements to it in terms of, you know, tools to basically use in conjunction with the anchor momentum, in conjunction with price itself. So they go together like peanut butter and jelly. Um, I'm at a loss as to why it's broken up like this. The only other thing I can think of is maybe we go to a higher time frame. go out to the daily for a minute. Basically, I zoom into the 5 minute. I hang out when I'm doing positional or swing trading. I hang out on the daily, and then I look at monthlies long term to see what the real long term is all about. So let's take a look at the daily. And it screws up the volume profile, but I was just interested to see what we can see in terms of the indicators, and most especially the inverted VIX. And unfortunately, the inverted VIX is showing that there's an area which it just can't paint properly. And I don't know, something in the code maybe. I'd have to look a lot deeper to see what's going on. And like I said, this is a Jordan 930s indicator, and I'm not going to necessarily step on his toes, to see if I can find anything. I'm sure that since he came up with it, he might very well come up with a solution to it. But the other thing I would say is, rather than focus on the break in the indicator here, we could focus on the front end. And the front end is where everything's going on anyway. So I'm going to go back down to the 5 minute again. And we'll just look at the front end. And the front end's perfectly fine. If we zoom in the chart, like we did before, we'll just zoom in on today. There you go. It's broken back here, but it's working up front. So it gives a good signal. You got a crossover here of the inverted VIX over the moving average, and it stays above the whole way here. And that roughly coincides with the beginning of the uptrend here. So that's kind of nice. Then the Bollinger Band is what? It's a volatility indicator. So it's going to give you an indication of volatility. And you get like a little mini squeeze here. And then the inverted VIX crosses over the moving average to the downside. And with that squeeze, what do you get? You get a little move to the downside. So you can scalp pretty good with these tools once you get used to using them, I think. But in the meantime, let's just go forward. And I'm going to take the inverted VIX off for now. Just keep the anchor momentum. I tend to try and simplify as much as I can, because everything else is just really complex anyway. So it's just one less thing to really deal with in terms of complexity. Okay, terrific. Now let's see. Let's back out a sec. Go back to and what do I got? I got the bug again. I don't have my daily volume profile anymore. I got the chart volume profile. So let's see. Let's see if I can reset it. Okay, good. So we're back. And we're back with fibs. The fibs were the last thing that I was going to go over on the 5 minute chart, and here they are. So what do we have? We have these are Fibonacci extensions, and I'm just wondering if they're 5 minute or they're a daily. If we put the daily, I don't think these are daily. This is 5 minute. And the 261.8, which in the notes on Use ThinkScript on the thread, basically talking about 261.8. 261.8, I just felt like that was the number I was coming down to. And sure enough, it did. It overshot. But in some respects, what did it do? It came straight down, and now it's working its way back up. So that was a pretty darn good place to get in at 261.8. And you had to hold on tight because it went lower. It's not perfect, but it's pretty darn close, I think. Because even if you bought here and you hung on tight, boom, turn around, start working it higher. So 261 is good. Let's see if we have the ability. I don't think so, but there's the daily. Daily's even better. The 200% on the daily is showing you, once again, instead of being up here with the 261.8, you're down here with the 200%, and it plunged a little bit lower, and then it took off. So either one, and that's confluence to me. The two Fibonacci's being close together, that's confluence. You got two different time frames, you got two different Fibonacci coefficients, and you got basically, you know, good intel, I think, in terms of get in. It's going to reverse. Now the only thing is, what we're lacking is some additional information from a technical analysis standpoint of what? Of basically, is this truly a reverse or is this plunging more? Is this another plunge like this is? How do we not know that it's not? Well, I'm going to go up and it's not showing up on here, but I'm going to put it in anyway. Just bear with me for a sec. Old anchor momentum comes to the rescue. Now what is the anchor momentum showing? It's showing the plunge down here. And it's coming back up. But it's hard to, you don't get the interpretation that you do when you zoom in. So I'm going to zoom in. I'm going to start from the beginning of the day here and just zoom in and take the 3 days. And maybe I'll just cut off the extension there, which I don't know why it's extending. I didn't do that, I don't think. Well, I must have done, because nobody else did. But so here's the plunge down. Here's the 200%. Comes back down, retests. That's another thing. If you didn't get in here because it was a little busy, or it was just, the market maker didn't pick you in terms of getting shares or a contract here, you get another chance here. This comes down for a retest before it takes off. And what is this showing? This is showing right here, the red line cracks underneath the green line. Up here, price comes down. Where does price come down to? This plunge. When it gets far away from the green line here, the red line that is, the fast line gets away from the slow line, and it's down here, that's a pretty darn good place to buy. That's a contrarian buy, because it takes a lot of strength and courage to face, potentially a lot further down. You don't know necessarily when it's the right hand side of the chart. Here, we don't know what's happening over here. I mean, it comes down, does a bounce, it's found support here, a little bit of confirmation, not divergence, but confirmation of a higher low here. So that's why you take that if you get it. If you didn't get in anywhere around here with all this going on, or you didn't feel, I got to be honest with you. A lot of times I chicken out. I'm like, the heck with it. I'll wait for, a retest like this rather than try and get in on this, be a hero and get really screwed, because you don't know necessarily that it's going to bounce from there. Anyway, what I was trying to get at is we don't know what's happening on the right hand side of the chart. That's the future. But what we can do to train is come down. I know I'm out of view right now, but you do the right and left arrow thing and do the right arrow and just advance one candle at a time. Boom. You got in there and all of a sudden, bam, big buy there. But there's a little too much of, too much too soon. So it's coming back. So you may have a third opportunity to get in. But if we advance one candle at a time and we just start training ourselves based on one candle at a time, where's it going? Is it going down or is it going up? What's it look like? What's the indicator look like? What's the anchor momentum look like? It's going down or it's going up? It's going up. So what it do? Higher low, and up you go. Let's go back and do another couple candles at a time. Okay. The buyer still came in and pushed what was selling off back up. Okay. It's consolidating a little bit. Okay, testing to the upside. There's overhead supply. This thing pushed up into a new range over these previous tops, and down it comes. As a result, the selling pressure pushed back down, or the sellers, whichever you want to call it. Okay, we just got a burst of two candles, but they're both showing what? Selling, overhead selling. Now that can be profit taking when it gets pushed up high and somebody's like, you know what, I'll take it, I'm out, boom. You know, or it could be a situation where the buyer's pushing it higher and the sellers come in and say, no, it's coming back down. What it's also showing is you draw a trend line just straight across here. You're going to look for a breakout across, above a trend line here. You know, just slap something in here quick. That's rough, but that's okay. We'll just do that quick. Then I'll go back down here. Boom. There's your breakout. You actually got a good signal here, but it didn't break out yet. You got to hold for the breakout. Here you get the breakout. And what did it do? Came back up to the point of control. But established a hole after this consolidation. What is this consolidation really? It's working its way towards the big breakout. I mean, it's not really a bull flag. It's not. It's just a simple trend line on top because everything, and this is showing the dipping in to the top side of the overhead supply, and then you must be done with the supply because boom, price just breaks out. It makes its way back up to the point of control. Get rid of that. No longer valid. So you can go candle by candle and just see the action unfold, the price action, and just train yourself as a result. I mean, a lot of you out there, you may be watching this, but you're probably a hell of a lot better than I am at, you know, all of this stuff. I mean, I've been doing it for a while, but I'm still learning every day. Every day I'm learning something new. So I'm going to zoom back out. Got a serious lag. And basically, what is it showing? Let's slap another trend line in. Let's see. Just as a rough gauge. Just put that in there. Just say like it's a line in the sand. If it breaks that, then you're out. But if it doesn't break it, you're in good shape because it's working up, you know, to the upside. Just a quick trend line. Nothing special. It's not perfect, but it's just a rough gauge. You got two touches. You got the initial, and then you got one touch, I should say. Probably be better off if you had a couple of touches testing it, so you know that it's pretty much a real trend line. But that's what it's doing. It's going higher. And where's it going? Maybe up to those naked virgin point of controls. Taking care of that business. We don't know, but we shall see. Excuse me while I collect my myself. Take a quick look at notes. Okay, so this chapter is mostly about volume profile. I mean, it's good to work the anchor momentum into the equation because it helps see things. Like we didn't even, we're only focused on the 5 minute here. I didn't even go up to the, well, I did go up to the daily. And we lose the volume profile up on the daily because it's just, imagine it's going to take some work to figure out why that's not properly displaying. But I'll figure it out. And when I do, I'll come back and post, you know, post what I find. Um, we pretty much covered everything. I don't want to do like this 40 minutes already. I don't know if anybody's hanging out this long watching the movie or the video. I want to do them short and sweet so you can get in, check things out, and then get out. So I'm going to pretty much leave it there, I think. Well, I want to do one more thing. I mean, screw it. It's already 40 minutes. I will look at something besides MNQ. And if you've made it this far, I would ask you to just in the comments take your favorite stock, your favorite future, your favorite whatever, and if I can do it, I'll work all this stuff into the ticker that you put up there. So pretty much any future, any stock. Um, Not really into cryptocurrency at this juncture. Uh, and forex too. Not really into forex either. So I would say any stock or any future, you know, and then we take a look at it and look at it all the way around, and that would be another video. But in the meantime, I was just thinking of taking a look at Nvidia because it trades a gazillion shares,